We're back on the S&P 500 futures, starting off with a nice long trade here at the bottom. There's a bullish candlestick forming, and that is a great signal for us to enter in. So let's move into our review mode here, and we can start taking a closer look at this trade. But before we do that, I want to quickly talk about this trading week. It's honestly been quite a miserable trading session. There's been a lot of low volume, low volatility, and there's just not a lot of action and opportunity happening in the market. And so when that happens, you really get these slow trading days. You might have ones where, you take one trade, you take another the next day, and maybe it's a win and a loss, and it ends up in some type of break-even situation. Or another day, you take two trades, and it's a win and a loss. And so these are things that you have to expect as you trade. There's not always going to be action packed. And so this day that we are reviewing is actually probably one of the most exciting trading days that we've had these past few days. So we'll get started looking at our first trade here. We went long right here at the bottom here. As you notice, there is some support. We can draw that out real quick here. There was at least 3 touches here as the market tried to break down lower. So that is a failure if we look at it that way. And then we can take a look at the opening action. So what happened with the market this morning? Well, it immediately started in this trading range. We can draw that out here. And as you can see, there was a lot of indecision. The market just didn't know what it wanted to do this morning. It tried to go long, it tried to go short, and then it actually tried to break out long here. You'll notice there is a breakout. The bullish candlesticks are trying to creep up higher, but then this ultimately fails. It fails once right up here, and then it fails again a second time, creating this double top, and then the market actually flushes down based on that. And that would be a pretty good trade to take. This is a breakout that then ends in a failed breakout, which reverses and sells off. But I believe that there was some news being released at this time. And the thing about news is you really don't want to get caught up in news. You don't know how the market is going to react to what is being said. And so that extra volatility is not something we want to deal with as a trader. There's already so much that is up to chance already. We don't need to include any more variables such as some type of economic event. So it's a shame that we did miss out on this trade. We weren't able to take it, but trading the news is not something that I would suggest you do. But on the flip side, we have a breakout on the bearish side. And so we can look for this exact same pattern to happen. And again, you see that we had this first breakout here. And then again, they made the second attempt right here. So that is that same double top pattern that we had up at the top. And then I actually wanted to come in on this third attempt to try and break out and sell off lower. And then as it turned up higher with this green candlestick, we entered in long. And our first target based on this is we should be looking to at least come back into the trading range. With most breakouts, the general pattern is we break out. And then if it fails, the highest probability, or the target we should be comfortable with, is one coming back somewhere in the middle of this range. You can think of a trading range as kind of a big magnet. Imagine that there is a line here, and you'll notice as prices oscillate within this trading range, they want to continue coming back to this magnet. And so the same thing happens on a breakout. It breaks out, and then it wants to come back to this magnet. Again, it breaks out, wants to come back to this magnet. So this middle line here, probably the best place for us to take our profits. So as we creep closer to that on our live screen, we will be looking to hopefully exit out of this trade. Now, let's talk about why these breakouts work and kind of the philosophy of the trap trader. Remember, trap traders are the best way for us to enter in. And so if we look at this breakout, who is trapped here? Well, first of all, you have some early sellers. They come in on these small red candlestick, and they are few, right? Early sellers are these smarter sellers, and so they're coming in at the better opportunity. But then as the market continues to sell off, you start getting FOMO. You start getting these excited traders and they start piling in. And you'll notice that they pile in because these bars start to grow in size. This means that a ton of traders are rushing in. They're throwing their money at the market and they're trying to sell because in their mind, they think that this market is going to crash. They think that it's going to plummet and they think that they are going to make a huge killing if they sell here. And, there's the fear of missing out, right? They think that, oh man, I am getting left behind. So they start piling in. And then all of a sudden it stops. There are no more emotional sellers selling. And all of a sudden these early sellers at the top here, they start to take their profits, which creates this green bar here. And then if you notice, the green bar comes up, they scalp out of their trade, and maybe some of these FOMO buyers, they're in a lot of pain. They came in and they sold and they're like, hold on, why is the market going against me? And then they start jamming the close button. They want to get out of their position. And so a lot of this pain is happening right here. And then at the same time, you also have to think, okay, there's going to be some FOMO buyers. There's going to be some greedy buyers who are coming at the bottom here. And they're saying, hey, if I buy this low, the market might just rocket up and I will make a killing. But what's going to happen to those people is they don't realize that this buy here is probably best for a small scalp, maybe something to the EMA, maybe something, around here, you'll notice there's like a little double top. This would tell people, okay, it's probably profit taking time. Let's get out. And so what happens is both sides actually get washed out. You have the greedy buyers. They get washed out as they make this new low here. And then the greedy sellers, they get washed out as it comes back against them. So FOMO traders, they're just getting ripped apart on these climactic moves. Meanwhile, if you are the more experienced trader and you're patient, you can wait for the double top to happen, wait for that kind of second attempt to happen. And then here, I even waited for the third attempt. And when we see that, then we can feel more comfortable about coming into this trade and then thinking about hitting those, more appropriate targets too. It's about the appropriate targets. We're not coming into this trade and thinking, okay, we're just going to skyrocket off and make a new high. That might be the best trade for us, but we also have to be reasonable with the type of movement that we're having. You'll notice that, we opened with a trading range, and this trading range is about 4 points, but this move all the way to the top is 10 plus points. And so expecting a 10-point move on a day with low volatility, that's probably not going to happen. So looks like we have exited our trade here. We took our, I would say, comfortable profits coming back into the trading range. And then at that point, we want to wait and see what the market will bring for us next. All right, we're here on our second trade. It is a nice sell, a nice lower high coming off of the EMA. That is a great signal for us to come in and sell if that's something we want to do, given the overall market pattern. And if we take a look back at what's happened since our last trade, you'll notice that quite a lot of time has passed. Our last trade was somewhere up here. We tried to buy in here and we were looking to, let's try and zoom out a little more. Yep. So we were trying to take some profits back in the trading range up here at the top. And then what happened was that was actually the high. I wasn't expecting that to be the high. We kind of lucked out and the sellers came back in control. They took that as a breakout pullback and then they just shut the market down. They made this massive sell-off down. Again, totally was not expecting this. And hey, if you were one of those FOMO sellers, remember those FOMO sellers who came in at the bottom, and if you were able to hold through that pullback, well, congratulations, you got a nice move. Your bad habits paid off, and that's probably not a good thing for you. It's probably going to instill even more bad habits within you and may cause some ruin down the road. But aside from that, that's a different story. Let's start talking about the trade at hand here. So looks like we have gotten quite a few red candlesticks here as it's sold off lower, which is very good for our trade. It means that the market is in alignment with what we are doing here. So we're going to look for that to continue pushing down lower. And then if we think about profit targets, I would say the easiest place for us to kind of expect the market to go down is probably near this support zone. You'll notice that there is a double bottom down here. And so if you were a buyer and you came up here and you tried to buy, your stop loss is probably all the way down here. This is probably the safest area where you think, okay, the market, if it breaches this double bottom, if it comes near, my buy signal is probably not that great. And so, so there we go. We have taken our profits already. The market tested this area, and we haven't really gotten a chance to talk about the trade. So what is happening here? What is making me want to buy this? Well, first of all, yes, there was the massive sell-off. Let's see, let me move the screen over a bit. We had the massive sell-off down here, and you can't disagree with this. The market is bearish. The market wants to sell off. If you ignore this, this is a key sign that the market is trying to tell you, hey, we are in a bear trend. And so since we're in a bear trend, we want to be looking for sell signals. Next, what happens after this massive sell-off? Well, the market has to recover. It has to make a few pullbacks. No market just goes straight down forever. A healthy trend always has a couple pullbacks inside of it. And that's what allows us to continue, digging deeper and deeper and deeper if we want the trend to last. So we have a pullback. And then what happens after the first pullback? Well, we actually get a second pullback. And that is what we love to see, which is the two-legged pullback. Except this time it is on a much bigger time frame, but that doesn't mean that it still can't apply. The same rules and the same strategy can apply here. The two-legged pullback, we're looking for that to continue the bearish move. So how do we examine the bars here to really understand, how is this two-legged pullback going to pan out? Well, first of all, we notice that there are a ton of bullish bars here coming in at the top. The same thing that happened with the other breakout, right? You have these FOMO traders who are going crazy. They're seeing the market shoot up on this second leg, and they're thinking, oh my God, the market is about to reverse here. I have to get in. And so they rush in. And what happens? They're disappointed. The market starts going against them, and this is what's going to cause them pain. Some big, big red candlesticks come in as they get flushed out. And for us patient traders, that's our signal to come in. That's telling us that, okay, this two-legged pullback is probably valid because we're starting to see the selling back it up. And then we start to see it go deeper. And then what really triggered me is we get this double top here. The market tested this zone twice. It sold off, went underneath the EMA, and then came back to test the EMA with a lower high, bouncing off of it. And that's a pretty good setup for me. You get this two-legged pullback, sells off, nice confirmation. Then we come back, pull back, retest into the double top, break through the EMA, get a lower high. I mean, you can't ask for anything better. And then again, yes, we want to target the area of support where we think the most traders have their stop loss, where the market will cause the most pain. You could also think, okay, another place where the market could cause a lot of pain is actually with a new low too. And so at that point, you have to kind of think about, okay, what profit target do I think am I most comfortable with? Do I want to hold my trade for a while and, see if it could possibly come down to that new low down here? And yeah, that could happen. But for me at the time, I felt most comfortable taking out the swing low at the double bottom. To me, it felt like a pretty clean trade. I could come in, sell, come out, and then wait for the next opportunity to show up. And not long after our last trade, we actually came really close to smashing through the lows here, but it came back, bounced back up, and now we are in our second trade. And I hope you can kind of understand what's going on with this trade. You'll notice, we have that double top pattern again. Let me draw that out. One test, two test, and then there is a third test that fails at the EMA here. And this is where we come in for our sell. And there's one thing I want to talk about this trade. I actually got distracted at the time of entry, and I messed up a lot of things with this trade. You'll notice it filled instantly. This market completely crashed. So you'll notice that a ton of people were probably trapped into this trade. But unfortunately, my execution did not go the same way that I wanted this trade to pan out. So first of all, what was the first mistake I made? Well, I had my entry order in somewhere down here. I was looking to enter as we broke below this swing low. But then if you look at the chart, you'll notice that there is a beautiful red candlestick showing up, and it closed right off of the EMA. And that would have been the best place to enter. It would have been amazing to come in right below this candlestick. And then for the profit target, I would have loved to at least target the lows here. You know, if we are going to trap people at the EMA and we're going to crash down, we will most likely at least test the lows here and, you know, hopefully break through. And, you know, as you can see with the chart, we're going to continue going down even further. But I simply got distracted. I was put in my order and then I looked away for a split second to take care of something else. And the market decided, hey, I'm just going to go ram right through it and run through. Didn't have enough time to move my entry. Also did not have enough time to move my profit target. So, you know, I'm not mad. We still had a win here, but it was not the win, you know, I was hoping for. But that's okay. Mistakes happen, and it was honestly my fault for getting distracted. Anyway, let's talk about the trade real quick. It should be pretty self-explanatory. You have this low here, and so what's going to happen with this low? Well, you're going to have buyers that come in at the bottom, and, you know, I think they're doing a smart thing. If you come in here and you buy at the bottom here, again, you could look for that scalp back to the EMA, which is what the smart traders will do. They will fade this low and then take some scalp profits at the EMA. But what happens is you're also going to get those greedy buyers. You're going to have those buyers who are looking for a home run. And so as they see these advancing bullish bars, they see 1, 2, 3, they think, wow, this is going to rip much, much higher. And so they're going to start piling on. But then the disappointment comes in. Remember, trap traders, disappointment is where we should get alarmed and we should start focusing and looking for a trade. The traders come in, they're buy, hit this double top, and then they start to panic. It goes down, and then again, it tries for the second attempt, or it could be the third attempt. In this case, you know, it's a third attempt to break out higher. Again, it rejects into the EMA, and at that point, you know, buyers, every buyer should consider this trade done. They should start panicking. They should start exiting. And then if they're smart, you know, they could even reverse their trade. They could come in for a sell. And then for us patient traders, we should immediately be alerted to this. And we should say, hey, you know, the buyers here, they're getting crushed. They're getting disappointed. They are, you know, they're in a lot of pain right now. And so let's enter in and hopefully we can help them push down lower and help them exit their trades, which is exactly what happened here. You know, I wasn't expecting to be as crazy of a sell-off as it actually happened. You know, the market works in mysterious ways. But at the end of the day, I hope you can see that, you know, buyers came in, they tried to shove in, hit the double top, disappointed, comes into the EMA, rejects again, and then that's when they finally get slaughtered. All right, guys, that's going to do it for this video. I had a lot of fun talking about breakouts, trends, and some of the pullbacks. I hope you guys learned a thing or two. I'll see you guys next week. Happy trading.